Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our banner story. The Finance Department is pushing for the passage of the two remaining tax reform packages. That's before President Duterte finishes his term by next year. The DOF said it would press Congress to pass the remaining priority tax bills, which are the Real Property Valuation and Assessment Reform Act and the Financial Intermediary Taxation Act. The first measure seeks a reform in property valuation by adopting a single base for taxation. This would take into account the market values of local government units and the updated values as benchmark for other purposes, including right-of-way acquisition. The measure hurdled the lower house in 2019, but the Senate version is still pending at the committee level. Also remaining at the upper chambers committee level is the proposed passive income law, which had been passed by the House in 2019. More optimism, at least in equities. U.S. stocks rose for the sixth straight session. The benchmark closed at an all-time high that was spurred by fresh signs that the Biden administration is, of course, committed to passing that sizable bill, of course, for a stimulus aid there to address unemployment over in the U.S. There's also an increase in vaccination numbers that's now higher than the new daily cases that boosted the optimism that at least the U.S. economy will be taking off later in the year. So you can see here the performance of Wall Street overnight, largely in the green. I just want to take a quick peek at Asia. We do have the Lunar New Year public holidays now starting to begin. For instance, over in China, they're on break for at least 1 week, but you're going to be seeing some optimistic signs here for the Nikkei 225. At least it's up by 0.2%. Now over in Singapore, the FTSE Straits Times also up by 0.6%. Now I did want to take a quick peek at a couple of non-equity issues here. First of all, Bitcoin. Let's take a quick peek at that. That is, of course, XBT/USD. So this is, of course, benchmark to the greenback. That has jumped to a record after Tesla bought in $1.5 billion worth of Bitcoin. There you can see that trading at close to 46,000 to a dollar here. And finally, another optimistic one is Brent crude. Now that has now breached, I'm going to pull out Brent crude for you guys here, breached $60 a barrel. Now recall that this comes after, of course, WTI has also been climbing, and this is actually a 2-year high for that commodity. Apart from Brent crude, you've actually got just a general uptick when it comes to commodities. Copper prices as well up. You can see that already approaching $61 to a barrel for oil here. We're going to be asking our economist later on what that means for our own inflation print here in the Philippines. So let's take a quick peek at our own local index. Recall we did rebound yesterday from an earlier loss. We had the biggest banks extending those gains, and it seems to be another uptick this morning, at least in the first few minutes of trade here, up by 0.5%, breaching 7,000 levels yet again. And one thing that I do want to focus on are the banks. I'm going to be pulling out that sector for you guys here, especially as you've got a report seemingly positive on the banking front that bad loans unexpectedly and finally perhaps fell for the first time in a year in the month of December. Now recall that we had been expecting bad loans to continue rising as consumers start feeling a burn in their pockets, of course, from that unemployment rate and also increasing inflation. But nevertheless, the gross non-performing loans, or at least those which remained unpaid for at least 30 days past due, fell 2.3% rather from the previous month. So that's around 392 billion pesos in December. Also, according to that report, local banks' bad debt ratio fell from a record high. It closed 2020 at 3.61%. Now you can see the banks here staging a rally that's up by 0.5% this morning, led by Union Bank and BPI, extending those gains from yesterday. Now taking a step back to discuss the state of the economy, we have with us Mike Ricafort. He is, of course, the chief economist of RCBC. Good morning, Mike, and welcome back.
Hi, good morning, Dani, and dear viewers. Thank you for having me.
Mike, Mike, let's kick off with inflation. And this sprint, which felt so much contention the past week, 2-year high, at least for January. Some say this is not yet over, and you seem to be one of those people that says that it could even be going up to 5%. Does this go in contrast to what the finance department has said, that it's a temporary uptick? Do you feel that there's still a lot of upside risks there?
Well, it's really driven by supply side factors, Danny, more than anything else. First, we have the storm damage, the damage of some of the crops, some of the agricultural production that led to higher prices of food and other agricultural products. It's number one. And number two, we have also the higher pork prices brought about by the African swine fever that reduced pork supplies. So, and thirdly, we have external factors that are beyond our control, or exogenous factors uh, led by the higher global commodity prices, especially grains, including food like wheat, uh, soybean, corn, among others, as well as higher metals prices, other minerals, and other major global commodities. They're now hovering at an average of the highest levels in 6 to 7 years. So those are factors beyond our control.
Mm-hmm.
And those factors cannot be addressed by uh, being supply side in nature. They cannot be addressed by monetary policy.
Okay.
So, meaning for this coming Thursday, there's a chance that it could be put on hold the local policy rate at the record low of 2%. Because what would be critical now is that the next question is, would these supply side factors lead to second round inflation effects? So, so as a matter of prudence, it would take a few weeks, a few months, and assess if there would be increases in the prices of other affected goods and services in the economy, especially if this would translate to higher transport fares, higher wages, and of course everything else follows. So what's really critical from a monetary policy point of view. If indeed, for instance, if indeed there are already signs of second round inflation effects, then there's a chance that we might see a modest tightening of monetary policy, say particularly a modest hike of 25 basis points, enabled to better manage both actual inflation as well as better set as well inflation expectations, just to send a signal.
Sir,
When,
can I
yeah.
interrupt you for it? Because you did mention that you're actually expecting a hike. This is not, something that was definitely not on the agenda as early as late last year, with the BSP saying that they're going to be continuing on this low interest rate path and the easing path for at least a couple more years. To what extent do you think that this is an urgent need and there's a preemptive need to start hiking rates to address the runaway inflation?
Well, that's true, Danny, because this time around is different. We have a similar situation more than 2 years ago when inflation was relatively high in 2018, uh, largely due to higher rice prices and many other factors like storm damage as well. But this time around, we have COVID-19, and the economy needs all the support that it could get, especially by way of relatively easy monetary policy. So that would be a key consideration. That's why it won't be that easy to just tighten or by way of hiking the policy rate because of this. Because, for instance, even if you look at globally in the US, the Fed officials have been signaling that they would try to keep the Fed funds rate at close to zero for the next 3 years. And that's a similar tack by being applied also by other major central banks, and including here in the Philippines. We have seen also recent signals related to that matter. So it would be a tough balancing act, a
Mhm.
very delicate balancing act, because you need to manage economic recovery. You don't want to jeopardize that by tightening monetary policy, while at the same time, there's a need to balance the risk that inflation, especially if it breaches in a sustained fashion, the inflation target of especially breaching the upper limit or ceiling of 4%. Because
Mhm.
by the way it looks right now, we're coming from a low base, meaning it's already the anniversary of the COVID COVID-19 lockdowns since middle of
Right.
March, we would see the full effect of that in terms of base effects. We'll be coming from a very low base effect, meaning uh, a year ago we have very low demand, prices have been subdued as a result, and now mathematically that by itself, assuming all other factors are the same or constant, we may see a pick up or a higher year-on-year inflation, especially starting the middle of March, and we'll see the full effect of that by April. So by then, from April to October, we might even see a chance of inflation reaching 5% levels.
Sir,
Assuming,
how worried are you about the oil prices now breaching 60 a barrel? This was something, before this whole COVID-19 pandemic, wherein the oil prices, were beneficial in terms of our deficit. Now it's going back up. To what extent have we already priced that in when we're looking at the targets of inflation this year?
well, that's another factor, Danny. The third factor that I mentioned in terms of categorizing these supply side factors, which should, the first two supply side factors, like the storm damage on agriculture and on ASF, in reducing the pork supplies, those two factors are could be temporary in nature, that can be better addressed by non-monetary measures by way of increasing local supply. That's the bottom line. Whether by way of increasing importation of pork, chicken, and other meat products, as well as the price ceiling or the price cap for 60 days in Metro Manila. So, and at the same time, also the increased local production and as well as sourcing in other provinces in region for pork and new harvests and planting season for crops and other agricultural products. But this third one, this global factor, is exogenous to us. So,
Mm.
because we have seen convergence of factors. First, the pickup in the economic recovery. We have seen a relatively better recovery in China, and they're the biggest importers of oil. That's why oil prices are starting to go back well into the pre-COVID levels because it ended 2019 right before the COVID pandemic. It ended around 60 to 65 levels. So we're moving back towards those levels, and that's the highest in more than a year. So that definitely, those are the nature of the supply side factor, of these external factors, that the costs are being passed on. It just happened now that we're still reeling and recovering from the COVID-19 pandemic. Demand conditions remain relatively soft. So it's a question also whether or not the businesses have the pricing power to pass on the cost. Would they
Okay.
absorb, would they pass it to consumers, but given the relatively low demand? Or there's a chance that some of these producers or manufacturers may also just absorb it and they'll
Yeah.
have narrower margins. So those are the
Okay.
dynamics now. That's why it's supply side driven. It's not because of higher demand.
Okay. Sir, can we talk about the fiscal measures now being debated? On the one side, you've got the lower house is really pushing for higher stimulus. On the other side, you've got the DOF at least saying that the relief measures are enough for now. Which side can you say you were on, and which to what extent do we really need this stimulus urgently passed?
Actually, Dan, it's always welcome to have more measures to support the economic recovery program.
But can
Definitely.
we afford it, sir?
Yeah, actually that's the main consideration. So we have been having these constraints on the budget and the funds availability for any additional stimulus, as has been experienced since last year. So, and at the same time, yeah, it's a matter of fiscal prudence as well. It's also a tough balancing act in the sense that there's still, well, the timely approval of the national budget is already a good thing by itself. We have seen the market's really getting excited about this. That caused the market to the PSEI to rally dramatically from 5.8 in early October to 7,000 levels in just a few weeks, and it sustained at 7,000 levels from early November till recently. Now, so there's well, with that there's funds for more funds right now. On top of that, we have the extension of funds validity or the appropriations of the unused funds for the 2020 national budget that's extended till the end of the year. We also have the extension of the fund's validity for bayanihan till the end of June of this year. So maybe as a well, that's it's pragmatic also
Okay.
to utilize whatever we have and maybe yeah, and then increase spending, especially on infrastructure and the various COVID programs, and this may include the vaccines as well. And and then if it's already utilized fully, that's a time that this is the level up, the stimulus measures because of the need to manage limited funds right now. But definitely it's welcome. I think it's very constructive at that in that sense, given that the hierarchy of priority in terms of government spending because this year is critical. We were about a year before the election ban. So before the almost a year before the presidential election. So expect a lot of government spending on many government projects, especially infrastructures, both big and small alike, being able to show results, including the build. So
All
that
right.
would definitely help the economic recovery program. We might see economic growth of at least 6% this year, as well as next year, as a result of that.
Okay. So, of course, a welcome, always welcome, but whether we can afford it is still a question. Their fiscal prudence needs to first ensue. Thank you so much for those insights. That was, of course, Mike Ricafort, Chief Economist of RCBC. Thank you, sir.
Yeah, thank you so much, Danny, and have a nice day to you and to your viewers.
Here are the other stories from the corporate front. The food unit of San Miguel plans to transfer its nationwide hog inventory and facilities to local racers that amid skyrocketing retail prices of pork. San Miguel Foods says it is looking to shift the inventory of its Monterey brand to local hog racers to give local piggeries an opportunity to recover. Monterey has also been affected by the transport ban on pork and pork products due to the continuous spread of ASF. As a result, the SMC unit decided to change its strategy in favor of local players. SMC President and CEO Ramon Ang says this move could open the doors for more Filipinos to become agri-entrepreneurs. Now, Meralco customers will see a slightly lower bill this February due to cheaper supply. The power distributor says power rates will go down by about 7 centavos this month. This means that households consuming 200 kilowatts per hour every month will save around 14 pesos on their power bill. Meralco attributed its cheaper rates to lower generation costs compared to the previous months. The utility firm would also further hold off from disconnecting unpaid lines until March 31st. That's following President Duterte's directive. And McDonald's Philippines shuttered at least 30 stores in 2020. That's on the back of lease expirations and some concerns with financial sustainability. The Golden Arches development disclosed that it opened 16 stores last year, but still shut 30 as it assessed financial sustainability issues. McDonald's now has 655 stores remaining in the country and is falling short of its target to run more than 700 stores by the end of this year. Now, as of September 2020, it posted a net loss of 967 million pesos compared to the 1.2 billion pesos net income it incurred in the same period in 2019. This as sales revenue fell by 39% due to the impact of the pandemic. Only 38% of the fast food giant's branches were operating amid stricter lockdowns in March. This went up to 84% at limited capacity by May. However, GADC President and CEO Kenneth Yang believes that the vaccine rollout would improve the restaurant's prospects this year. And that's a first look into the business day. Today's Tuesday, February 9, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.